When people hear the word investment, they picture excitement. They picture screens flashing, phones buzzing, men in suits shouting, and money moving fast. That picture is almost perfectly designed to make you poor. I didn't get rich that way, and neither did anyone sensible I know. I got rich slowly, quietly, and in ways that looked boring to anyone who didn't understand compounding. The real secret isn't brilliance, it's avoiding stupidity while letting a few good decisions run for an obscenely long time. If I strip my life down to its skeleton, there are 5 investments that quietly made me richer every single year. None of them required genius. None of them involved constant activity. All of them required temperament, patience, and the ability to sit still while the rest of the world entertained itself into mediocrity. The first investment was not a stock. It was building a reputation for being rational. That doesn't sound like an investment, but it paid better than any security I ever bought. Early in my career, I learned something that most people never grasp. If people know you are fair, rational, consistent, opportunities come to you. People bring you better deals. They trust you in crisis. They forgive mistakes. Reputation compounds faster than money, and unlike money, it can't be taken away in a market crash. Every year I behaved rationally instead of emotionally. That reputation paid interest, and it paid dividends for decades. The second investment was owning productive businesses instead of trading pieces of paper. Most people think investing means activity. It doesn't. It means ownership. When you own a truly good business, one with pricing power, honest management, and durable demand, time becomes your ally. You don't have to be right often. You just have to not be wrong in a fatal way. I didn't jump from company to company. I let a few good ones work for me while I slept. The businesses earned money, reinvested it, and grew. I didn't need excitement. I needed inevitability. The third investment was reading. People underestimate this because reading doesn't feel like work. It feels slow. It feels unproductive to modern minds trained to chase stimulation. I read constantly. History, psychology, business, science. That reading built a latticework in my mind, a framework that allowed me to recognize reality when I saw it. Every good investment decision I ever made was downstream of something I had read years earlier. Reading compounds in a strange way. The more you read, the more you understand what not to do. Avoiding stupidity is vastly more powerful than seeking brilliance. The fourth investment was choosing who I partnered with. Warren Buffett was not just a business partner. He was a filter against my own stupidity. 2 rational people checking each other's errors outperform one genius operating alone. Most people choose partners based on charisma or convenience. That's insane. You want partners who tell you when you're wrong and don't enjoy humiliating you while doing it. Over decades, that kind of partnership compounds into fewer mistakes, better decisions, and calmer reactions during chaos. That is worth billions. The fifth investment was living below my means. That sounds moralistic, but it's just math. Every dollar you don't need to spend becomes a soldier you can send out to earn more dollars. Lifestyle inflation is the silent killer of compounding. I never tried to look rich. I tried to stay free. Freedom is what allows patience, and patience is what allows compounding to work its magic. People who spend to impress are renting happiness at usurious interest rates. Now let me tell you something uncomfortable. None of these investments are exciting. That's why most people ignore them. They want the one clever trick. They want speed. They want validation. Compounding doesn't give a damn about your feeling. It rewards consistency, humility, and time. It punishes arrogance and impatience. That's why it works so well for those who understand it, and so poorly for those who don't. People ask me why I didn't trade, why I didn't diversify endlessly, why I didn't chase trends. The answer is simple: I understood my limitations. I am smart, but I am not omniscient. I cannot predict short-term movements reliably, and neither can anyone else who is being honest. But I can recognize a good business, a good partner, and a good habit. Then I can wait. Waiting is harder than action for most people. That's why waiting is so profitable. One of the great ironies of investing is that activity feels productive, but is usually destructive. Every time you trade, you pay a tax. Sometimes literal, sometimes psychological. You convince yourself you're doing something clever. Meanwhile, the truly rich are sitting quietly while their assets grind forward like a glacier, slow and unstoppable. They don't look impressive at cocktail parties. They don't have stories about dramatic trades. They just get richer. Another thing people don't like to hear is that temperament matters more than intellect. I've known people far smarter than me who made themselves poor through envy, ego, and impatience. They couldn't stand watching others get rich faster. They couldn't stand being bored. They needed to feel special. The market is a brutal place for people who need emotional gratification. It rewards those who can delay pleasure and tolerate long periods of apparent inactivity. Over time, these 5 investments reinforced each other. Reading made me more rational. Rationality improved my reputation. Reputation brought better partnerships. Partnerships led to better businesses. Living below my means gave me the capital to stay invested through downturns. That's compounding at the systems level, not just the financial level. Most people look at individual decisions. The real power is in how decisions interact over decades. If you're young, the lesson isn't to copy my exact path. The world is different now. The lesson is to build a system that makes stupidity hard and rationality easy. Invest in habits that pay you every year without requiring constant effort. Avoid things that feel exciting but decay your long-term outcome. Remember that the biggest gains come late, after decades of consistency. Compounding is a slow starter and a furious finisher. I didn't wake up one day rich. I woke up many days older, a little wiser, and quietly wealthier than the year before. That's the kind of rich that lasts. That's the kind of rich that doesn't evaporate when conditions change. And it comes not from brilliance, but from a handful of good investments held with extraordinary patience.